Hi friends, I'm Rebecca. Welcome to Squintillions. Today I'm revealing the results of the 2019 Grow Your Dough Challenge. The Grow Your Dough Challenge involved putting $1,000 into your investment choices via whatever investing platform you liked at the beginning of 2019. I initially invested via 6 different platforms, and my accounts were opened right at the end of January 2019. Then in the summer, I added a 7th platform with all new investments just for fun. If you want to open an account with any of the companies I mentioned, check the description below for affiliate links. By using one of my links to open an account, you might get a small cash bonus, a free stock, or reduction of fees on your investments depending on the company, and I will get the same. All account totals for the challenge for my 1-year results discussed in this video were taken on Thursday, January 30th, 2020, after the markets were closed. For more in-depth detail on my original investment choices, check out my first YouTube video on the Grow Your Dough Challenge. I also have videos of the quarterly updates posted for more information. Now that 12 months have passed, let's see how these investments have performed. I'll be switching over to the computer to view the results. Okay, looking at the Grow Your Dough Challenge, last place is Lending Club. I lost money, and that's because I ended up having 2 of the loans charged off, and I currently have 1 that is in the late 31 to 120 days. After 1 year of having $1,000 in Lending Club, the adjusted account value is currently at $913.08. Lending Club, not the way to go for investing, especially if you're investing in some of the riskier notes, which is what I was doing at the beginning. And then they stopped offering the lowest grade notes that I had invested in July. And moving forward, I'm just going to keep this money in Lending Club. I'm not going to close my account or withdraw it, but I am going to change my note allocation to be much less risky, and we'll see how that goes for the next year. So I decided to adjust my mix of notes on Lending Club, and I've just changed it so that my A grade notes are at 30%, B are at 55%, and C are at 15%. So previously I had A at 17.55%, B at 23.99%, and C at 55.92%. And you can see here with the target allocation that I've just changed to are here in the stripes. And as the notes get paid off and cash is reinvested, these will slowly adjust to the new target allocations. Next is my Capital One CD. It looks like my CD is 0, and that's because it actually closed out today. I didn't have my CD continue into the future. I elected to have that money moved over because I want to do other things with it. But you'll see that the final amount here is $1,027.01. Being very conservative with an investment, I made all of $27. But of course, that was much better than what happened with Lending Club. In Fundrise, my final total is $1,078.15. I'm pretty happy with that. I like Fundrise. I like what this company is doing. I'm going to keep my money in the account. It's not the best return on investment that I've had, but it's not the worst. And it's a nice way to diversify my investments. And because I really like this idea of crowdfunding real estate, I am probably going to put a little bit more money into this account. I earned a total of $72.71 in dividends, and there was an appreciation of $6.65. Now we'll look at the next account, and that is Robinhood. As you can see by this chart this is the 1-year chart. Robinhood from October just went straight up pretty much. It's gone down a little bit because of what's going on in the markets presently, but it got pretty high, almost hit $1,100. But we're ending the 1-year time span at $1,085.56, which is pretty great, since the last time I checked in with it, it was still under that $1,000 investment mark. I'm probably going to change some of my investments as they go past that 1-year mark. When I sell them, I don't have the higher tax rate for selling the shares, even though they're only a handful of short shares that I would be selling. I still like to minimize any kind of extra cost or fees. And the one exciting thing that happened recently on Robinhood, I finally had somebody use my refer a friend link, and I got a share of INPX, which is the company in Pixon, which works in the technology space. And the value of that is all of $3.11, but I will take it. The next account is my E-Trade account, in which I had kind of done investing like I normally do investing. This is like a short version of how I set up my personal portfolios. We've got $1,143.77 of value in this account. I had my dividends reinvesting in this account. Whenever I was paid dividends throughout the year, they just went right back into those investments that I have. The total unrealized gain is 8.62% in this account. The next account is not an account I opened in January last year, but one I opened in June. I decided to open an M1 Finance account because I wanted to see how this platform works. So I put in the $1,000 just like I was doing with the Grow Your Dough Challenge, and I figured I would track that investment in the same way. And maybe because I put it in at just the right time in mid-June, this has been my best investment portfolio, with the total value now being at $1,243.07. I was very lucky to get NVIDIA when the share price was pretty low, when there was issues with the China trade agreement. And I also was able to jump on Disney while the price was a little bit lower. I have 2 ETF funds that are also doing well. The return on this account is 22.06%, which that's great. This is my Acorns account, and I started off with $400 in the account, and I put $50 in every month so that it would equal $1,000 by the end of the year. And you'll see now that the value of this is $2,007.74. Apparently, I make a lot of transactions on my credit card and through my checking account. And I also had a 2x multiplier on my roundups, so that helped move the money in faster. So the total gain for this account was 8.59% for the year, which is reasonable. And the investment portion of this account, I've made $157.91, and the amount of roundups that I've contributed is $829.84. So all of those little purchases I've made over the year have really added up. Going forward in this account, I have stopped the monthly contribution, and I have turned off the 2x multiplier on the roundups because I save my money very conscientiously in other ways. I don't really need the roundups to be constantly taking money out of my checking account at a higher rate. So I'll just take it where it's rounding up to the dollar. I'm not using the multiplier, and I don't want to move any other money into this account. The most successful way I found to grow your dough in 2019 was through a combination of continual savings and investment of that savings, as seen in the Acorns account. The next best way seems to have been through some smart and luckily timed stock picks. The steady way to grow your dough was through investing in dividend earning stocks and dividend ETFs, as well as through the Fundrise platform. The way to lose your dough was through choosing to invest in the riskiest loan levels in Lending Club. Adding the gains of all these accounts and subtracting out the losses from Lending Club on top of my deposits totaling $7,000 in these accounts, I saved and earned an additional $1,498.38 in 1 year, which I wouldn't have if I hadn't done this Grow Your Dough challenge. That's a total return of 21.4%. Now, some might say Acorns shouldn't count because of the additional cash savings involved. So with Acorns out of the calculation altogether, I earned $490.64 for my investments. That's with the Lending Club loss subtracted, for a return of 8.17% on a $6,000 investment. This is a fair return considering the S&P 500 typically averages between a 7 and 10% annual return. However, this past year, the S&P was on a bull run. Imagine if I had bought about $6,000 worth of the Vanguard S&P 500 ETF, ticker VOO, on January 28, 2019, at its average price for that day of $248.22. I could have bought 24 shares for $5,957.28. Then checking the value about a year later on January 30th, 2020, with an average price of $301.09, my shares would have had a total value of $7,226.16, or a return of 21.3% for the 12-month period. That doesn't include the dividends, which would have been about another $134. I could have made my life easier and just made one simple investment in VOO last year and had a much better return than I did using all those other platforms minus Acorns. But that wouldn't have been as interesting to follow, now would it? And I certainly wouldn't have learned so much about different investing options. Concurrent with the challenge, I dedicated $1,000 to myself for growing my blogs, Squintillions and You Make My World Rock, and my Squintillions YouTube channel over the past year to help with improving my process and my knowledge. I ended up spending a total of $980.17 on such expenses. Some of these were one-time expenses, so I don't think the coming year will cost me as much money. Though having said that, I could easily upgrade some of my recording setup for YouTube as I'm getting by with minimal equipment. The only money I made from Squintillions was from a couple affiliate referrals this year, and that was less than $10 total. For that reason, I don't really plan to spend much more money until I start making more on affiliate income or have some other source of revenue coming in besides my investments, of course. I know this past year I've struggled with consistency in posting content, particularly on YouTube. Nevertheless, I plan on continuing to publish content as I am driven to share all that I have learned with others. My goal for this year is to publish a new blog post every week and to make at least 2 YouTube videos every month. I'd love to get to 1,000 subscribers and have this YouTube channel monetized by the end of the year. If you enjoyed this video, remember to hit the like button. And if you want to follow my further financial experiments, be sure to subscribe. There's a lot more content coming on personal finance and personal growth here on Squintillions.